Hey guys, I'm Derek Wilkins. I'm with my cousin Drew Nichols. Today we're going to talk to you about Lincoln MoneyGuard 2 versus the Nationwide Care Matters 2 hybrid long-term care insurance product. Just a bit about LTC Tree. We're an independent broker. We work with all these companies and we kind of shop the market and we'll help find you the best deal. So today we're going to drill down on these two companies and go over the pros and cons of each. And Drew, I understand you got some graphs for us you've been working on to give us a visual.
Yeah, I'll bring those up in a minute. But a lot of people are shopping between these two plans in particular. And we should also mention the order of the companies in terms of their benefits and how they rank with each other. It changes basically monthly. We're recording this in April of 2024, almost May. So this information will really be relevant for the next couple of months. But over time, the evolution of these products has meant that companies are rolling out new and typically better products regularly. So why is that? I mean, let's explain to people a little bit why these products are getting better as time goes on. Maybe you can kind of jump in on that.
Yeah, that's a great point because I was actually looking at my just records. The last Lincoln MoneyGuard product I sold was, I think it was 2019. So it was almost 4 or 5 years ago. So why is that? So why are we looking at Lincoln MoneyGuard now? What's happened is it really has to do with the Fed funds rate. When 2022 we started having all this inflation, so the Federal Reserve raised that Fed funds rate from 1% to 5%, or maybe in 6%, whatever it is now. It's much higher. Point being, that's kind of the lifeblood of these insurance companies because they can't take your money and just go put it in the stock market. They have to put a lot of it in fixed assets like treasuries. So now they're getting so much more return on their capital. Some of the companies, I think it was Minnesota Life was the first to lower the rates, then Nationwide did it, and then now Lincoln did it as of January. So they lowered the rates because, like I said, Lincoln wasn't getting any business. And so if they wanted to play in this space, they had to come back down to earth with their rates. And they did in January. Now Lincoln's is really the number one or two company for the dollar put in.
Exactly. And so today we're going to talk specifically about the Lincoln MoneyGuard Fixed Advantage. So a lot of people out there in the market have different illustrations that they're looking at. Lincoln has a variable product that we don't sell, which has the reason why I say it's variable is the values are not guaranteed. So there's a link to some indexes in the markets and things like that. We're going to stick with the Fixed Advantage, which we like because everything's guaranteed. And we're going to compare that to the Nationwide Care Matters 2 plan, just to show people, kind of for a typical client. This client is right at 60 years old this month. And this would apply to almost all states in the country as well. So let me pull up a graph here and we'll take a look. So here we go. All right. So this is the first comparison we're going to look at is the total amount of money that this client gets from the two different plans. So what I'm doing here is I'm putting again, this is a 60-year-old male, and I'm putting in $6,000 per year in premium for 10 years. So over the next 10 years, this gentleman will pay $60,000 total. And what he will get on day one is about 10% more in coverage, total long-term care coverage with Lincoln than he gets with Nationwide. Can you see this graph, Derek? It's probably a little bit small for you, but
I can't. Yeah, I can't see it. Yeah, the 503 and the 454. Yep, got
yeah.
it.
So what you're looking at here is for $60,000 in premium, day one you have over $500,000 in long-term care benefits, which is spread over the payments are spread out over 6 years when you receive them, versus 454. I mean, that's a pretty major difference between the two companies. That's worth batting an eye at. But let's talk about the other differences between the companies as well.
Yeah. So with Lincoln Financial, when they did roll out the new product, what they did was they added a 50% benefit for a cash. Basically, it's a 50% cash benefit. Nationwide's 100% cash. Minnesota Life's 100% cash. Bright House 100% cash. Lincoln was getting killed on that key features because what does cash benefits do for you? Why is that important? it's very common to where, especially for home healthcare, where you want to find somebody good who you're bringing into your house, somebody who's responsible, and as opposed to having to go through an agency where the agency maybe they charge you $30 an hour, but they only pay the worker 15 an hour. If you can find that worker and pay them directly, I mean, you can usually save money and your benefits last longer. And so it just gives you the ability to spend the money on whatever you want. You don't have to track down receipts when you're 85 years old and submit it to the insurance company who wants to do that.
Yeah.
So once the claim is triggered, they send you the cash. You can spend it any way you want. So that's Nationwide's advantage. It's 100% cash benefits. Lincoln is 50%. Now, I will give Lincoln credit. They were 0% before this new product. So it's a step in the right direction. So you couple that with them giving you what 10% more benefits, it's worth consideration.
Yeah, I mean, the only place where it would be like a non-starter to have a reimbursement plan would be if you know a family member is going to be your caregiver, because that is excluded under most policies typically for reimbursement. But with a lot of the indemnity plans, and you know, the language gets very particular on these, check your specific policy. But most policy language on the indemnity plans will allow for informal caregivers, which can actually be direct family members. So if family members are in the cards, you probably don't want a reimbursement plan like Lincoln. Otherwise, if you can get more benefits, more life insurance, more long-term care, you can look at it two ways. You can spend the same money and get more than 10% more coverage with Lincoln, or you can get the same benefits for less than 10% off. I mean, for this particular client, if we keep the benefits exactly the same, he saves over $5,000 in premiums in those 10 years that he's paying in. That's pretty major.
Yeah, that is major. And then you also couple that we haven't talked about the extra life insurance benefit that the Lincoln product is giving. They're giving what probably about 10, I don't have the number in front of me, but I have seen Lincoln giving 10 to 15% more life insurance benefits versus Nationwide as well. So
Yeah,
that
in
kind of
this
goes into the
example,
calculus.
I won't bring it on the screen, but yeah, so he puts in 60,000 over 10 years. He has a 75,000, almost $76,000 benefit with Nationwide. So in other words, he puts in 60 grand over 10 years, lives his life, never needs long-term care, just passes away. His beneficiary is going to get all that money he put in, that 60,000, plus on top of that, a bonus of about $15,000 of extra money in that life insurance benefit. Lincoln's, however, is $23,000 over what he put in. It's $83,000, almost $84,000. So that's a major thing. If you buy this and never use it, you're going to have thousands of dollars more with Lincoln spending the same money in premiums.
Yeah, so kudos to Lincoln. And just as we began the video with, we work for you, not one company. We're a broker, we're an independent broker. We work with all these companies. We weren't selling any Lincoln for 4 months ago. They lowered the price. Now they have a very competitive product, so we're bringing it to our clients and presenting it to them.
Yeah, if you're new around our channel, we're LTC Tree, and what we do, we're independent agents. What we do is we do comparisons for clients. So we're going to go out and run an illustration from Lincoln, from Nationwide, from Securian, from Bright House, from multiple carriers, and then we're going to help each client figure out what's best for them. For example, sometimes clients will tell me, well, I'm from Spain and I'd like to use my policy overseas. We're going to recommend one company over another, and we'll do a whole other video on international benefits. But we're independent. So if you'd like a second opinion or even a first quote, reach out to us in the comments at LTC Tree.
All right. Thanks, guys. See you, Drew.
All right. See you later, Derek.
Bye.
Bye-bye.